The iShares Core 1 to 5 Year USD Bond ETF, ISTC, is an exchange-traded fund, ETF, that aims to provide investors with exposure to a diversified portfolio of short-term, U.S. dollar-denominated bonds. The ETF tracks the performance of the Bloomberg Barclays U.S. 1-5 Year Treasury Bond Index, which includes bonds issued by the U.S. government and its agencies, as well as by other U.S. corporations and municipalities. One of the main advantages of investing in ISTC is the diversification it provides. By holding a variety of different bonds, the ETF helps to spread risk across a broad range of issuers and sectors. This can be particularly beneficial for investors looking for a low-cost and convenient way to gain exposure to the short-term bond market. Another advantage of ISTC is its liquidity. Because it is an ETF, it can be bought and sold like a stock on a stock exchange, making it easy for investors to enter or exit their positions at any time during market hours. Additionally, the ETF's underlying index is highly liquid, which helps to keep the ETF's bid-ask spread low and its net asset value, NAV, closely aligned with its market price. ISTC also offers a lower expense ratio than many actively managed bond funds, which can help to boost returns over the long term. The expense ratio of ISTC is 0.07%. The ETF is also subject to the credit risk of its underlying bonds, which means that it may lose value if the issuers of the bonds default on their obligations. Additionally, short-term bonds tend to offer lower yields than longer-term bonds, which can make the ETF less attractive to income-oriented investors. In summary, the iShares Core 1 to 5 Year USD Bond ETF, ISTC, is an exchange-traded fund that provides investors with exposure to a diversified portfolio of short-term U.S. dollar-denominated bonds, with the ETF is a low-cost, liquid, and convenient way to gain exposure to the short-term bond market. It has a lower expense ratio than many actively managed bond funds and an expense ratio of 0.07%. However, it also has credit risk and may be less attractive to income-oriented investors. It is important to note that this ETF may not be suitable for all investors, and it is always important to consult with a financial advisor before making any investment decisions.